So guys, spoke way too soon. We're currently up over 1,000 plus pips 3 days into June, which is absolutely incredible. Currently on Germany30, we're up almost 700 pips alone on two positions. So what I'm going to do now is just go over this trade. So as you can see at the start of the week, I mean, from last week alone, what we realized is we want to catch the full move to see the overall outcome that we desire, right? So when you're trading the indice market, typically you're looking for massive moves. We have a motto in our indice group, and we say anything less than 300 pips is a waste of our time, right? So after last week where we missed the 700 pip move because we closed out a position before the daily closed, we said start of June we're gonna basically change that all around, and what we're gonna do is try and catch the full leg. Why? Because we predicted that we're gonna see an all-time high in June. And I stick to this. We're going to see the indice market, US 30, Germany 30, hit an all-time high, and then we could potentially see a market crash around maybe the end of July or even August. Or we could see a rally throughout the rest of throughout the year. Basically, I wouldn't be surprised if that happened. And in January 2021, we see a massive crash. But I don't really want to get into that. Let's get into what's in front of us at the moment and why do we think the market, the indice market in particular, is going to hit another all-time high, regardless of the actual fundamental data that's currently out there. So first things first, the way I saw it is the market has to pull back. So when we saw the crash at the start of the year, we had to at least see 50 to 60% retrace. So that's already one reason to buy because, as I always say, the market will never travel in a straight line, right? So that's one confluence we could say, and that's just highly speculative. That's not really something tangible. But the second confluence for us was the global economy is opening back up. People are going to get back to work. Employment, unemployment levels should fall. So this alone, any good data will obviously support that market retrace that we keep talking about, right? So in our mind, we say, okay, we'll probably see the market retrace around, let's say, 50 to 60%. The reason why I say all-time high is because we're going to see a lot of buying pressure, right? So people are going to completely forget about the actual the real fundamental data, right? Mass unemployment, housing. Currently, the housing market is crashed to the lowest level since 2009, right? Again, this is the same story we saw in the 2008 economic recession. We're seeing the exact same thing again. I think investors and traders are going to almost forget the reality of the situation. They're going to get overconfident, and then what happens? Wipe out. And that's where we step in. We're planning to buy this up and also sell it to the downside, but we have to stay focused on the overall picture. Even though we're buying, we have to remember the market is going to crash. It's going to crash. And some of you may be saying, yeah, but it's going up now. Why would it crash? Or yeah, it's going to crash, but it may not crash to the full length. That is irrelevant. Even if it crashes 3,000 pips again, we're happy with that alone, right? So that's irrelevant. Now let's just get into this trade that we took at the start of the week, because I completely missed the point there. So as you can see, price broke above a key resistance level that we've had in pretty much since the start of the year, and this was essentially our confirmation to put in a buy position. We're up significantly profit wise, so literally we're risking less than 100 pips on this trade. On the first entry, the entry is now up over 546 pips 3 days into the new year. So that's a phenomenal trade. And again, we just see the market traveling in a straight line, which is what we like to see. This morning, we were kind of bouncing against this trend line here. Sorry. We're bouncing against this trend line here. draw that in again. Sorry. Here we go. Yeah, so we saw price bouncing against this trend line. So we thought to ourselves, you know what? Let's put in another buy position. We'll risk about 71 pips. So we're only risking profits essentially from the first position, right? So for us, is a win-win scenario. We can't lose regardless. Our first initial take profit was actually only 250 pips away, but we decided that we might as well trail so we can catch the full length of this move. So that position is now up over 100 pips. So it's looking incredible. That's over 600. Sorry, that's actually 700 pips now. No, it's not. Yeah, we're literally 650 pips up. So 50 more pips, and we've hit the 700 pip mark. And it really is that It really is that simple. The trend is your friend until it ends. If you'd like to join the indice group, send us a message. This is going to be our biggest trading day of the year. Right, June is going to be massive. It will be our best trading month, better than our 6,000 pip move in March. So yeah, make sure you join us. Send us a message. I'll speak to you all soon.